Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the morning call. Futures are ripping this morning after a blockbuster jobs report. I walked in, futures were down a little bit, really quiet ahead of that report. We came in, the headline number was 165,000 non-farm payroll ads this past month versus expectations of 150,000. But the even bigger numbers were the upward revisions for February and March. I think February we went from 268,000, excuse me, sorry, to 332,000, so that was a 64,000 job ad in February. In March we went from 88,000 to 138,000, so that's a 50,000 job ad. So total we added about 125,000 jobs, excuse me, that we weren't expected to add this jobs report. So you go ahead and take a look at the spiders. You can see that we are going to gap up here above all-time highs. Futures still climbing this morning, up about 12 handles so far in the S&P, so obviously a blockbuster report. Nothing in the way of resistance, obviously, as we're opening up at all-time highs above 1,600. And what'll be interesting to see now is whether we can build on this gap up and go and really create that capitulation for the bears. We've sort of been hanging out near all-time highs and narrowly making all-time highs at various points over the last few weeks, but we haven't really got that explosion or that igniting bar through all-time highs that'll really cause what bears are left to really head for the exits. And this morning could be the beginning of that. You know, futures aren't showing any signs of abating on this this gap up, so it'll be very interesting to see whether we get some bullish action even after this huge gap up. But it looks like pre-market people are really piling into index ETFs, and especially you go around and look at stocks pre-market, and obviously with the indexes ripping, you have a lot of stocks really ripping higher. But there's also some negative things you could point to in this jobs report. You have still the lowest participation in the labor force since 1978 or 1979, 63.3% participation in the labor force, which tells you there's still a lot of people out there that have pretty much given up on the job search. You know, you did have some nice ads this month, but the fact that there's so many people out there that have been looking for jobs for so long that haven't been able to find them, that's really discouraging, and it's something that bears will continue to point to as signs that, you know, maybe this jobs report wasn't as rosy as people want to make it out to be. But like I said, the big thing was those upward revisions from February and March, and overall we had 125,000 jobs this report that weren't expected, you know, to be added. So that's definitely a promising sign for the economy, and the markets are cheering that this morning. On a stock-specific front, we'll go to LinkedIn last night that had earnings. You know, the bulk of earnings season is behind us, but we still have some big names reporting, and obviously everybody was looking forward to LinkedIn. I'll take a look at the daily chart first. And LinkedIn, obviously everyone was expecting a very strong report as the stock was ripping to all-time highs in the last few days in anticipation of that report. But people were sort of looking at last quarter. We had Netflix last quarter delivered a blockbuster report, gapped up and went, and LinkedIn did the same thing. So they saw Netflix this quarter do the same thing again. So perhaps they were thinking LinkedIn could follow its cousin Netflix, but instead LinkedIn fell short of expectations last night. The guidance was the really bearish part of that report, and the stock is down around 10% this morning. If you go to the 5-minute chart, you can see pre-market is trading at 183.50. Go back to the daily chart on that. You know, it is down 10%. It's a big move, but it's really only coming down back, you know, near its 21-day moving average. It's just below. So it'll be interesting to see whether it just, you know, basically comes back in this base that it recently broke out of, or whether it does get more downside action. I think in general, there's been some comments this morning from various banks that they think LinkedIn's guidance was very cautious, and, you know, future quarters they'll be able to surpass those expectations. But LinkedIn, for the most of its public life, has been able to beat earnings expectations, and this is one of the rare misses that we've seen since LinkedIn came public. So something to take note of. Maybe some momentum is slowing down in terms of LinkedIn monetizing its growing user base. But we'll stick in the social media sector. We'll talk about Facebook from yesterday. It reported earnings 2 nights ago, and yesterday responded very well to that report. It gapped up on the report and then went, which is what you like to see if you're a bull. You like to see a break out of a base, and then you like to see an acceleration away from it. And that's what we saw yesterday. And I think you really could see the tide turning for Facebook. The headline numbers in its earnings report were not, you know, stellar, but there was basically an inline report. But what you did see was very robust, I think 30% growth in their revenue from mobile ads, which people have been looking very closely at Facebook's performance regarding their mobile monetization, and that's one area they've really struggled, is that a platform like Twitter is very mobile friendly and it's built for mobile, but Facebook is not so much, and they've had a tough time monetizing their ads to the extent that they want to, but the report this week showed they're making progress in that area, and obviously investors are very, their optimism is boosted by that report, so it'll be interesting to see whether we get more upside in Facebook, and I think we definitely could, and this could be a big turning point for Facebook. And another note I'll talk about, there's been some talk in recent days about the possibility of Twitter coming out with an IPO. And one thing I tweeted about yesterday is that I really hope Twitter doesn't go public and doesn't become one of these companies that is trying to squeeze every dollar of shareholder value and this and that out of the platform. Is that the beauty in Twitter is that it's a very simple, pure, raw medium for communication, and that's why it's so popular. Is that there's no, there are some promoted ads, but they're sort of just dip their toe into promoted ads and advertising and things like that, and they haven't really made it overrun with ads the way Facebook is becoming. And I really hope, for the users' sake, that Twitter does an IPO and it doesn't become something that greedy shareholders or board members are going to push to get every cent of profit out of, because I'm sure it could become profitable, but I think if they did take that more aggressive approach, I think it would quickly lose some of its appeal and some of its popularity for users. But that's just a little rant by me, but we'll continue looking at charts. We talked a lot in recent days about highly oversold stocks that could be in for a short squeeze. And one of the ones I've talked about very often is Tesla. Tesla, I'm a big believer in the CEO, Elon Musk, genius physicist, great businessman. I think, I believe in people. I largely believe in investing in people as long as the products and the financials start to play catch up to your belief in a person. And that's what's happening with Tesla, is that people have been very optimistic about the stock just based on the fact that the cars are really cool and the fact the CEO is a genius. And you started to see the financials catch up a little bit, and that ignited a move. If we go back out to the monthly chart, above this range, above $40, and obviously you can see on the monthly it had an incredible month in April. May, it's got a little bit of a slower start. If we go back to the daily, it did put in a little bit of a topping tail, not something you like to see if you're a bull. And yesterday it was weak during the session after gapping up again. But it'll be very interesting to see this morning whether we get more downside in Tesla, because I think it did need to allow its short-term moving averages to play catch-up. When it traded, I believe the high here was 58.18. So once it traded up there, it was extremely extended from its short-term moving averages and needed to let those play catch-up. And you're seeing the 8-day play a little bit of catch-up, but I would think it would be healthy to see Tesla, pull back maybe into this $50 area. And if it does get into that area and starts to find its footing a little bit, I think this is one that, from a trading perspective, I would look to get involved in for another potential round of a short squeeze. These highly shorted stocks, they are very controversial because the financials oftentimes haven't caught up with the narrative that everyone is so bullish about. But from a short-term trading perspective especially, I think these are very appealing because they can move very quickly. They give you really nice percentage moves, and something I know Mike and Steve, Mike Lee, Steve LeVay in the Momentum Trading Room will definitely be watching and taking advantage of. A couple other ones in that highly shorted sector or group is BlackBerry is one that is starting to look a lot better. It's not one that I've talked about quite as much as a Tesla, and I'll look at FSLR in a minute. But BlackBerry looks like one that could be breaking out of a wedge pattern and could be set for a bigger run. If we go to the chart of BlackBerry, you can see this wedge pattern that we've drawn here before. I'll draw it again, get our line tool. It looks like one. The company, if you zoom out, you see how oversold this stock is. And I was talking to somebody about it yesterday, and I say, I'm not really a believer in the BlackBerry story. I think their phone revamp was an important step, and I think the products are definitely improving, and they needed to get rid of their old archaic handset. But I still think it's only going to be a niche player at best in the smartphone industry, and I think the company's ultimately not going to be successful. But that doesn't mean you can't get a bounce in the short term as you start to see some decent sales numbers from that new lineup of phones. And I'll zoom out like I said I was going to. I'll keep my promises. You see how oversold this stock is. I mean, it was a $140 stock back in 2008. Even back in 2011, after the story had already soured, it was a $70 stock. It's now trading below $16. You look at that wedge pattern, and you can see if you zoom out in the context of this big move, it's just a very small wedge pattern with a tight range. But I think this is one that you could see a short squeeze, and you could see a move in BlackBerry, maybe up to the $20 level above the top end of this wedge pattern. And then beyond that, who knows what will happen. But I think this is another one that's a short-term trading vehicle, not one that you look to put in the drawer, because I think over the long term, Samsung, Apple, all these other companies are eating BlackBerry's lunch, or research in motion. I call it BlackBerry now because they changed the symbol. But I think from a trading perspective, this is one that I would definitely look at, that you could get a nice move in over the next few weeks. And FSLR, the one I said I would talk about in the solar industry. Solar industry is really perking up as a whole, and FSLR is the most impressive one in that group, by a long shot. I had that igniting bar back here in April. This is April 9th, after they announced a more efficient panel that they created, and they announced really strong guidance based on their ability to potentially get a lot of new business based on that new efficient solar panel. And then we saw a beautiful flag, and we traded higher out of it. I know we've talked about this a lot of times, so I'm not going to talk too much about it. And then we're seeing another flag like that could ignite another short squeeze. You'd like to see a healthy bounce off the 8-day moving average. You'd like to see the 8-day moving average play catch up, just like I talked about in Tesla, and that's what happened in FSLR. And I think above this pivot, you could talk about this pivot from Wednesday's high, and then you could talk about this high here is around 47.46 as another area that momentum could come in, and bears could start to capitulate their stock, and you could really ignite a further short squeeze. Because it's just like BlackBerry, is that when you zoom out on FSLR, the short-term move might seem very big, and you might say, man, it's hard for me to climb into this stock after it's already gone up, almost 100% or 80-something percent in the last month or month and a half. But then you zoom out and you see, obviously this was a little bit out of control. Everybody was excited about the solar narrative and this and that. It was at $300 a share back in 2008. But that doesn't mean it doesn't have room to potentially get back up. There's not much in the way of resistance on this monthly chart until the bottom end of this range, around $100. And I'm not saying that would be a bold call to say FSLR is getting to $100, but I think my point is, in the context of where this stock has been, you don't necessarily want to look at a chart and say, man, that stock's gotten killed a lot. I think it could go back to $300 a share. But I do think there's some room for FSLR to go and continue to squeeze shorts. And it's mainly the mechanics of that trade that have me excited about FSLR for a potential bigger move. We'll move on to some stocks that aren't just pure, short interest type plays. And we'll talk about Apple, which is one everyone always wants to talk about. Obviously, the biggest market cap, or second biggest now in the world. Really constructive action since earnings. You had after hours that day, the stock was up 5%, then it was down 3%. Then during the session, it was ripping, and then it closed off its highs. Sort of threw everyone for a loop that day, but then the action that we've seen since then has been very constructive. And I've talked about this on Twitter and on a couple of videos I've done recently, is that I believe when Apple is ready to really go and make that bigger move, it's not going to give people an easy way in. And 2 days ago, when the stock pulled back here into its 8-day moving average, those are the type of pullbacks that I think if you want to be involved in Apple, you have to be ready to take advantage of those. Because I don't think you're going to get this big pullback into the 420 area, or retest of this bottom to allow you to enter at your ideal price, which everyone obviously is kicking themselves maybe for not being involved at that 385, 390 area. But I think Apple, when it's ready to go, it's really going to go and not really let people in. And this morning, obviously, with the market, it's gapping up really big, back above yesterday's high, and I think it's on its way first to this pivot around 470. If we go back to the chart, this is, I think, the first stop for Apple is going to be here, and I think you could wake up and see Apple back up here in the $500 area, filling this gap from the previous earnings report back up here above the $500 level in a couple months. Obviously selling may go away. The market's a little quieter in the summertime. Maybe some juice comes out of it, but I do think that Apple, it's actually shown it can separate itself a little bit from the broader market. Now the broader markets are bullish, so that would help the cause, but you saw Apple show significant relative weakness over a 6 to 8 month period from the market. And I think even if the market does quiet down as a whole in the summertime, I think you could see people start to get into Apple as the value narrative on Apple becomes a little bit stronger with the dividend, the share buyback, and then obviously you had that really strong demand for that $17 billion worth of corporate bonds, which was the biggest bond offering in U.S. history. Another one in the tech sector that's been really strong, bouncing back from its earnings gap down, has been IBM. And I'll give Jill Malandrino from the Street Options Profits credit for this one. This is a story she's been all over. She's really bullish on IBM, and along with a lot of other people, including Warren Buffett, who made some positive comments about it this morning and last night. You saw a huge gap down on earnings from IBM, traded lower from that gap, which usually is a sign to us that lower prices are in store. But I think you then had people see just huge value with IBM and a great opportunity to buy a dip in a company that is in a long-term uptrend, a really steep long-term uptrend, and could benefit from the narrative of growing CapEx spending in the second half of 2013, capital expenditures. We take a look at the long-term chart of IBM in a just steady uptrend from late 2008, really great trend, and it's one that if you did see this macro trend break, I think you could see some downside, but until that happens, you have to remain bullish, I believe, on IBM. And that was a great buying opportunity on that gap down and trade lower from IBM. Maybe a little bit hard to read that because of the bearishness that you got in those 2 days following the gap down. But this is one that looks like it's going to fill the gap, and I definitely wouldn't be surprised to see IBM back at that $215 level, back at highs, especially after those bullish comments from Warren Buffett, who's now on Twitter, so maybe people will be hearing from him a little bit more than normal. And we'll also go to Google in the tech space. Google, market leader, obviously wouldn't be surprised to see this one back at all-time highs, as it's not very far away. You had this beautiful downtrend that if you were looking for an entry to get back involved in Google, break above this downtrend was the clear area, perhaps on this day when it reversed following a false breakdown from this little pivot. But Google's one that psychologically it's a little bit tough for people sometimes to buy stocks that are on highs and stuff like that, but I think you want to look to play leaders, and Google as a core part of any portfolio. I think you can rest easy owning Google with all the business segments that it's involved in and all the progress that it's making on its monetizing its search and all that type of stuff. Google's a really strong company, one that I would love to be involved with. And we'll talk about another solar name. I know I talked about FSLR, and maybe I should have talked about SPWR at the same time, but we'll get to it now. As you see SPWR igniting after earnings, and just the solar sector in general is starting to get a little bit more love. You zoom out on SPWR, and you see a similar type story, even more extreme perhaps than FSLR, is that back in 2007, people were extremely excited about solar as the next big energy alternative, but obviously the stock has sold off a little bit from that $160 price. But macro, it's coming into this $20 area. Could be a place that SPWR may look to test. Again, that's a big percentage move. That's a little bit of a bold call, but I think if you do get a nice base, like we saw after the first igniting bar in First Solar, that SunPower could get a similar type move. All these solar stocks are highly shorted. Could get some nice more upside in SPWR. It's one that we've listed in off the charts several times. I know we don't talk about taking equity into earnings, but if you're a macro holder of SunPower, or you're a dip buyer in the solar sector in general, you're getting rewarded, and that's great to see in a market. Take a look at a couple banks. Obviously, a lot of stocks are ripping this morning with the market, and the banks look like one that could reemerge and help lead the market higher. Citigroup had the strongest earnings in the sector this past earnings report, and you often see leadership within the group rotate. And Citigroup, if you're looking to be involved in one of the banks to the long side, I think this is the best one right now. It's above its 8 and 21-day moving average. Has a little pivot in place here. Around 47.68 is the high of that candle, so that would ignite a move for Citigroup to 52-week highs. Again, relative strength in the sector, that's what we like to see. Bank of America, really strong this morning. We take a look at the 5-minute, all the way up at 1237 already, which is a nice percentage move pre-market for Bank of America. I know this is one that Scott is involved with, and I wouldn't be surprised to see it test, this pivot. All these banks have similar type patterns. This pivot's 1254. Who knows? We might see that today if this bullishness continues in the pre-market. The banks look like, again, a sector that could get back to highs and help lead the market higher. We'll talk about the last sector I'll talk about is the 3D printing space, which has come back into favor. Long term, I'm not a huge fan of putting these in the drawer at their current levels. I think 3D printing, I'm not going to say it's a fad, but it's the scope of its applications, I think, are a little bit overstated. And especially with SSYS and DDD, my favorite in the group is X1. XONE. It has wider industrial applications. People talk about the potential for 3D printing to revolutionize industry and manufacturing. And if that's the narrative, then I think XONE is the one you really want to own. had a very successful IPO. We'll go ahead and take a look at the chart. I'll show you XONE first, as I did talk about it as my favorite. Really successful IPO. I had that well-publicized rip on those 2 days after the IPO. Traded down, perhaps, if you believed in the story, a great chance to enter there. And then since then, it's just pretty much been in a steady uptrend. And you love to see new issues that show bullish price action soon after their IPO and in the months following the IPO. And that's obviously what you've seen in XONE, and one that, maybe you let some moving averages play catch up. It's had a volatile yesterday it was very volatile. It's had a volatile stretch here, big percentage moves almost every day. Maybe you wait for that to quiet down a little bit. Maybe wait for a retest down to these short-term moving averages. But in general, if you want to be involved in that sector, I think XONE is the best. DDD is also looking really good, breaking above this pivot here, looking like it could. There's not a ton of resistance in the way for it to get back up to this pivot here around 45. A lot of love coming back in the 3D printing sector. I know Mike Lee, Steve LeVay in the Momentum Room trade these very often. They give you big percentage moves. They're big movers. SSYS, the last one we'll look at. I know they've been all over this one too. Sort of have a short-term wedge pattern forming in SSYS. So if you're a short-term trader looking for stocks that are moving, this is a sector, 3D printing, that I think you should definitely watch. But overall today, obviously we're getting the big gap up this morning. What we will be looking for is how that gap is treated, whether we trade into that gap, whether we extend from that gap. It'll really give us clues about what we think the next few weeks and months even could look like. Like I said, we had 125,000 jobs added on this report that were not expected. That's what's really driving this very bullish sentiment this morning. So we'll be all over it in the virtual trading floor today. I'll recap it after the close, see how that gap is treated, and then we'll go from there in terms of picking stocks and trying to find areas that could show relative weakness through the summer. This has been John Darcy for your morning call. We'll see you out here later.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.